Hey guys, what's up? This is Francisco with Valorizo Capital, and today I just want to do a trade review video. I'm gonna be reviewing a recent trade that I made in SMH. I basically traded SMH to the short side, but I did it through the inverse bear ETF, which is SOXS. So I traded this one through that instrument. That's a 3x inverse ETF. So that's a really powerful way to gain some leverage. So we're gonna go through the setup. We're gonna go through the name, what actually caught my attention, and why I decided to take profits yesterday when we got that dump in SMH. So remember, guys, that this video is for informational purposes only, and that everything is based on my personal opinion and is not financial advice. So let's start here with SMH. Pretty straightforward setup. Right now the market is open. Is Wednesday. We recently had the PPI numbers, and tomorrow we're getting the CPI numbers. So I decided to take this position off. So let's go through the setup. So first of all, guys, I just want to show this pretty quickly. I did mention this setup on my Twitter account. If you do not follow me yet on my Twitter account is at Valorizo Capital. And in my Twitter account, I'm always sharing the setups as I see them. That way you can also trade them with me, or we can exchange some opinions or maybe some analysis, and we can share some other opportunities as well. So make sure to follow me on my channel. So I did mention this one. This is October 4th. I mentioned this one and I said, if you want to share the semis, is right here at the supply level and this declining 21 exponential moving average, which was the setup that I was seeing. So why I was looking at the setup, let's go really quickly to SMH right here. So let's go back to TradingView. First of all, I look at structure. So the first thing that I will look is at market structure. And the way that I look at market structure is pretty easy. I have this indicator, which is the first indicator in my screen, and this indicator basically shows me what is the structure in terms of moving averages. It's actually a pretty straightforward indicator, because it only looks at the 8 exponential, 13 exponential, and 21 exponential moving averages. So basically, if the 8 exponential is below the 13 and the 13 is below the 21, I'm gonna get red dots, meaning that those EMAs are stacked negatively, meaning that the fast moving averages is below the slower moving average. That's basically just a way to understand that price is in a downtrend. So that's the first step. Second step, I will look at my trend oscillator indicator, and this indicator is my favorite indicator. If I only get to choose one indicator to trade, it will be this one. And the first thing right here is that I got a sell signal that got activated right here on August 22. Why did I got that sell signal activated? Because when we are below the 50 line, and the 50 line in the trend oscillator is right here. When we are below the 50 line, that means that there's more selling pressure than buying pressure, meaning that the momentum is more bearish than bullish. There's nothing wrong with it. We just have to understand that if we want to play this, maybe playing it to the short side is going to have a higher probability of success. So I will actually say that this is the first thing that I look at. Then I will look at the moving averages. This is the first thing that I look at, is actually the trend oscillators. That's going to be the first one that I look at. So we got this one. So I had a sell signal active, and you can see that as soon as I got that sell signal, you can see that we basically had a pretty strong move to the downside. Now back to the setup. I mentioned the setup on October 4th. So I mentioned the setup on this candle right here. So that was the rally that we got into that declining 21 exponential moving average. Now, why the declining 21 exponential moving average is important? One of my mentors, based on the analysis that he had made throughout the years in the market, somewhere around 30 plus years in the market, have found that the 21 exponential moving average is actually can be considered a reversion to the mean in a short-term uptrend or downtrend. So it has a very high probability of success when it comes to acting as support or also acting as resistance. So that was my first signal. So I was looking at this. I knew that the semis were in a downtrend based on my indicators right here. So the next important thing is, okay, where do I short it? The first thing that I'm going to be looking for shorted is going to be that 21 exponential moving average. As soon as we got that move back to the exponential moving average, I look at market structure. And what is market structure? Market structure is basically where are the demand and where are the supply levels of price. And it's actually pretty easy to see. The way that I see it, I have an indicator which basically looks at minor highs and minor lows patterns based on price. This is actually a pretty easy pattern to understand, and it's basically just a candle. For example, this will be a minor low. A low candle that is followed by two minor highs candles, and that's usually a reversal pattern. So it's a pretty straightforward pattern. So that's the first thing that I'm going to look at in terms of price structure. And you can see that we had a pretty important level of support that then became resistance, meaning that demand level then became supply. So as soon as that level became supply, I know that there's going to be a wall of price. So imagine that there's so many people that sold at that level that are now going to defend that level because they don't want to get stopped out, right? That's kind of how the prices move here. So as soon as I got, now let's go back to the things that we were looking at. As soon as I got a downtrend in the trend oscillator, a downtrend in the moving averages, and then I got a reversion back to that 21 exponential, and then I also got a supply level. Then I got four things that are on my favor, saying that there's a high probability that we're gonna get continuation to the downside. So that's what I like to see. I wanna see the probabilities stacked on my favor. And then the last piece that I'm gonna look at is gonna be the squeeze. And basically the squeeze, if it's below the zero line, I'm gonna get these orange and red bars. And that means that the momentum continues to have acceleration to the downside. So that was another thing that I was looking at. And that was also kind of a confirmation that there is even a higher probability that we will continue to move to the downside. So pretty straightforward. That was my entry. And why did I decide to take my exit? Now here comes something really interesting. This indicator right here, as you can see the green lines and you can see the red lines. These are basically just the standard deviation levels based on the open of the week. First green line is going to be one standard deviation down. Second green line is going to be two standard deviations to the downside. So basically standard deviations, when you analyze price action on a statistical level, you will understand that when price from the open of the week gets extended somewhere around two standard deviations, there's a high probability that you're going to get a snapback to the mean. And that mean for me is going to be either that opening of the week or that 21 exponential moving average. So you can see right here that we got our entry, right? We got the opening of the week pretty low, meaning that we have a lot of room to the downside to that second standard deviation. And that's exactly what we got yesterday. So yesterday we got that move into that second standard deviation. And that was basically the signal for me to take profits. And also another very important thing for me in the trend oscillator that I almost forgot to mention is this right here. And if you have followed my channel for quite some time, for quite some time, you will know that I always look at momentum structure, not only price structure, but momentum structure. And here momentum is telling us that we have resistance in momentum as well. So we had resistance in price. You can see that we have resistance in price, but we also have resistance in momentum. So that's another thing that's telling me, hey, we're actually gonna there's a high probability that we're gonna see a wall of sellers, meaning that there's a high probability of a continuation to the downside. So pretty straightforward chart. I traded using the SOXS, so I traded using this inverse ETF. But and you can chart that ETF as well. We can take it a quick look, right? This is SOXS. You can see that we had a pretty strong move, and if you actually look at the day that I bought it, the day that I bought this one was on October 4th. So let me just see, when is October 4th? I think it's this candle. Yeah, this candle. So I bought it right here. I bought it right here on this candle. and then we got 2 candles to the downside, but then on the third candle we are starting to move to the upside, and then we had a pretty strong move. And you can also see that this one is an inverse, right? So this one is going to move up when the SMH is moving up. You can see that SOXS is also at that second standard deviation, so that's another reason why I took also my profits. And if you look at my trend oscillator, you can also see that this one was at momentum support. That is also another thing that tells me that there's a high probability that we're also going to see a move up here and a move down on the SMH. But mostly what I do, I will just chart the index or the ETF, which is SMH, and then I will execute using the SOXS, because I have found that the setups are way more cleaner on the ETF, and then you just use the leverage ETFs to execute the plan. And of course you can also chart it, that way you can also understand where's your stop and where's your target. As for my stop, I wanted to give this a little bit of room, so my stop, when I started my position at the 21 exponential, my stop was a move above this swing right here. So it never got triggered. We didn't got above that level, and then we just got a pretty strong move to the downside. So that was a pretty good trade. Let me show you the results of the trade. That way you can see my entry point and my exit point. Let me see where I have the picture. So right here. So you can see that I started my position on October 4th. And I closed my position yesterday on October 11. I bought my position at 54.93, and then I sold my position at 73.54. You can see that I don't have any open position right now in SOXS, and the total, let me see right here if I can get this. The total return for this trade, it was a pretty good trade for me. The total return for this trade, let me give you the exact number. The total return for this trade was 33.61%. So it was a pretty great trade for me. Pretty nice results, and it's basically just a pretty straightforward trade, right? It was a trend following trade. I was just looking for continuation, and we got it. And now I'm out of the trade. My targets were met, and that's it. That's it for the trade. So I hope that this video was pretty helpful for you guys. I'm sure that it is. This is my bread and butter, right? This is how I see the markets. A lot of people are looking for breakouts, for breakdowns. I'm actually looking for exhaustion levels in a trend continuation fashion. So I'm always going to be looking for those demand levels, for those supply levels, and then I'm going to be looking for those demand levels and supply levels, not only in price but also on momentum, and that way I can get what I consider to be the best price for a position that I want to enter, keeping my risk really small, and then and when I get these moves, I'm going to have some really nice gains in this kind of a scenario. So thank you so much guys for watching. Remember to like and subscribe, and if you don't follow me yet on my Twitter account, make sure to do it. Once again, it's @Valareso_Capital, and in that account I share my charts on a daily basis. And one chart that I recently shared today is BLO. I shared it yesterday, right? Let me see if I can find the post that I did, because I did mention this one. Here it is. You can see that I say in BLO, notice the pullback in decreasing volume into the demand level of 124, great level to start a bullish position and manage risk. So you can see that I posted it right here when we were approaching this level right here, which is going to be the demand level, which was previously resistance. And now you can see that we're getting a pretty incredible response to that level. You can see it right here. We are getting a pretty strong move. We are up almost more than 6%. So that's an amazing trade. It's acting pretty well. You can see that I got my demand level, and I also got that demand level on momentum as well. And I'm looking for continuation here. You can see that I got my stop right below this candle, and I'm looking for continuation into that second standard deviation for the week. And that's basically how I'm trading it. So once again, thank you so much guys for watching. I'm sure that the video is going to be pretty helpful for you. This is the way I trade, and if anything of it resonates with you, make sure to follow me, give me a follow, and we can trade together. So thank you so much guys. Peace out. Bye bye.